Welcome to the Land to Lots podcast, powered by Launch Development Finance Advisors. And now your host, Carter Froelich.
Hello, everyone, and welcome to the Land to Lots podcast. On today's podcast, we're going to be diving into the world of mergers and acquisitions related to the land development and home building industry. And to that end, I have the distinct pleasure of interviewing one of the industry leaders in this area, Tony Avila of Builder Advisory Group. Tony, welcome to the podcast.
Thanks very much, Carter. Happy to be here.
And Tony, for those in our audience that may not have heard of you or Builder Advisory Group, could you give us a brief description of who you are, how you got here, and what you do for the industry?
Sure. Yeah, I started in 1997 working at Montgomery Securities. We took builders public in the 1990s, and really I focused in on working with private builders that needed capital or wanted to merge with other builders. Montgomery sold to Nations Bank and merged with Bank of America a year later. So very quickly, we became the largest lender to the home building and land development sector. So the bank really wanted me to focus on large mergers and acquisitions. And one company that at Montgomery we took public was Schuler Homes. And I had the distinct pleasure of working with Jim Schuler. And then, of course, he merged in with Western Pacific and Craig Manchester. And it created a heck of a company. Apollo became a large shareholder. So pretty quickly, Jim Schuler decided he wanted to sell his company. And I quickly jumped over to get with Don Horton. And at the time, Rick Beckwith worked with Don Horton. So worked with Don and Rick and Don Tomnitz to have D.R. Horton buy Schuler Homes, which was one of the first or second largest M&A transactions ever. But what made it very unique, where I'm working at this large bank, Bank of America Securities, and I was with Don Tomnitz and Rick Beckwith on September 11th, 2001. And we were meeting that morning, and we had signed the letter of intent for D.R. Horton to acquire Schuler Homes, but we hadn't announced the merger because the merger agreement hadn't been signed yet, but we had signed the letter of intent on August 25th, 2001. And we're all at our investor conference on September 11, 2001. And of course, we all know the tragedies which ensued. And what the team at Horton did was we all just rolled up our sleeves. We made sure we focused on our loved ones for a few days. And then we focused on how we were going to keep putting this incredible merger together. And that was the first merger announced in the world, in any industry. We were able to very quickly, within just right at the beginning of October, and as we may remember, the stock market shut down for that whole week, and nothing was happening. Well, really nothing was happening in M&A for weeks, and ours was the first merger announced in the world, and we're really proud of that. It really helped make Horton truly national, going all the way to Hawaii, where Schuler was, and got bigger in California and Washington and Oregon, and definitely bigger in Colorado. So that was really a landmark transaction. And I was really proud to do that. Really honored to work with. That really capped off, I think, 17 acquisitions that D.R. Horton did over an 8-year period of time. And so anyway, from there, I quickly realized that me and large banks were not really suitable as an employee. And so I became entrepreneurial, went in, became a partner at another firm, started up my own home building investment banking business, focusing on working mostly with private builders, and then ultimately became Builder Advisor Group. And Builder Advisor Group, we've sold 15 home building companies in the last 2 years, including 3 builders in the top 100, including 2 builders in the top 50.
Wow, that's incredible. And where are we right now, Tony, in the M&A world as it relates to what you're doing, what you're seeing in the space, and more importantly, how are some of the issues related to financing impacting the private builders? So a number of different questions there. Feel free to answer them any way you'd like to address them.
Yeah, so the first question right now at mergers and acquisitions is quite hot. There's public builders right now are down in earnings in 23 relative to 22. So in order to enhance that and enhance earnings for 24, they're looking at mergers and acquisitions, and they're doing mergers and acquisitions. You also have an entire unit. So there's public builders, of course, in the United States, but then there's also public builders in Japan. And there's also private companies in Asia. There's also public and private companies in Canada, and there's even some European capital. So there's a lot, and there is also, there's Berkshire Hathaway has a subsidiary, Clayton, that's done a lot of M&A. So there's a lot of acquirers. There's about 43 bona fide, solid acquirers that are actively looking right now at doing something where we're across the table from them, representing the sellers, talking with them. But it's not just public builders. The question on the private builder, I would say that certainly the second half of last year, where absorption pace fell off a cliff and rates rising, gave a lot of private builders cause for pause and say, maybe I ought to look as now in 2023, absorption pace has picked back up despite the high rates. We have no resale inventory to speak of. That's off a cliff. So there's good demand for new single family home sales. A lot of private builders said, maybe I ought to take a look at taking some chips off the table. Certainly also the private builders have come to us saying, hey, we need help with capital, and we're just helping them with capital as well.
Okay. So when absorption kind of fell off the cliff related to the privates, did that impact their P&Ls and their balance sheets so that it was looking to become more attractive, or was it just really, hey, we want to potentially take some chips off the table, or maybe generational issues, let's look at selling, or a combination of all the above?
Well, I think the rising interest rate environment reminded everyone that we do have cycles in this business. And so let's look at taking chips off the table at the right time. Also, capital's been constrained. A, D, and C lenders have been hit dramatically. Regional banks have been hit dramatically. So as capital gets constrained, that said, okay, private builders and developers reaching out to us saying, hey, help with capital, or possibly bring an investor in to own a portion of my business. I still want to own and control it. That's fine. We're doing that too. We're doing deals where we raise capital, maybe equity into the company. It might be mezz for the company. It might be corporate debt, or it could be project-based equity or project-based debt. We're doing all of the above. That the private builders today are looking at a lot of it's generational. It's moving from one generation to the next, or they don't have a next generation. And it's like, hey, I'd like to ultimately set an exit path for me sometime over the next few years. Let's start looking at that now.
Okay. And as it relates to the mezz, the equity debt, is it relatively easy to raise that money, or is it challenging? What are you finding in the current environment we're Tony?
Well, yeah, we have our own proprietary debt funds.
Okay.
So for guys who are bona fide as strong, potential borrowers, we're actually providing capital to them. We were providing capital to companies like Pulte Homes and Weekly Homes. I realize Pulte is a large public company, but it's been a little bit of a challenging land banking environment with a rising interest rate, and a number of land bankers use leverage. So they will borrow money from others, but that capital source of borrowing has dried up or gotten very expensive. So that's made things trickier for some of the land bankers. So they'll look to us in our funds, which doesn't use any leverage. And then also we've had different builders. We've had private builders come, they need capital. We're providing it. It's more expensive than traditionally, but builder margins are extremely high right now, so they can afford a higher cost of capital, but we're also patient capital. So that's okay. Even if there's an interest rate that's at 14% or something like that, that's all right. I mean, traditionally they were using a land banker that might have been paying 10 or 12. We end up doing a land loan at 14 or 15. It's not that much higher. When a builder is making a 28% gross margin, they have room to pay higher rates.
Yep. And if somebody came to you, how long does it take you to evaluate the lending opportunity and get back to one of your bona fide potential borrowers?
We did a $130 million loan. We really started the day after Thanksgiving that weekend, and then we closed it on December 30th. It took less than 30 days to do a $130 million loan.
That's huge. Heading back to the M&A world right now, are there any particular type of builders that are more attractive as an M&A candidate, or as it relates to location, size? What are the acquirers looking for? And I'm sure that can kind of vary across your different 43 potential buyers. But just to give the audience a little flavor of what the buyers are looking for.
Sure. Generally, for the geography, it'd be a market that has strong demographics, good growth, good employment, jobs growing, population growing, and generally, a larger where somebody could get 500 units a month, something like that for scale minimum. For the profile of the seller, strong land positions, strong people in the organization, margins, good margins, growing margins, increasing in the number of sales, increasing in the amount of revenue, increasing in the amount of earnings. These are all incredibly strong attributes of a desirable company.
Mm-hmm. Is there anyone that stands above the others, or are they all kind of taken and viewed as a whole?
Well, especially usually it's people and land are two big drivers of, hey, does this deal make sense? And then of course the financial metrics are helpful. They don't have to be growing in earnings. They don't, it could be somebody that might be flat in earnings, but it's just a really attractive market, attractive people, and attractive land positions.
Yeah. You mentioned some of the Japanese builders, public companies. In January, I think, of this year, you guys represented Southern Impression Homes, their 80% sale to Gian, and then shortly after, Chesmar and Sakasui House. As it relates to those recent transactions, what was the opportunity that both Gian and Sakasui were pursuing in the market with their acquisitions of Southern and Chesmar?
I think for Gian, which now has been rebranded to Brightland Homes, and it's significantly owned by Sumitomo Forestry. I think two things. One is gaining a presence in Florida, where they really had no presence before that, and then secondly, a focus in the build-to-rent sector. Sumitomo Forestry has a multifamily subsidiary, and of course they're massive as far as their companies that are production home building, but not really any build-to-rent focus. So those were the two big attributes for Brightland and Sumitomo Forestry doing the Southern Impression deal, and of course having Chris Funk, who's very talented, retain a 20% interest and stay on and continue to grow the business. That was very strong, as well as just really good land positions, as I mentioned, great margins, great growth, all that. For Sekisui, moving into Texas was a high priority. So again, geography driving an acquisition. And then, Chesmarians, what can I say about them? They are an incredible group of people led by Don Klein and Ken Trainer, but the whole organization, 300 plus people strong. What an amazing company, incredible mortgage business, roughly 2,200 houses a year, just an amazing, amazing company. And this has been a very powerful acquisition. The team at Woodside and the subsidiary of Sekisui that works on these things, Rick Rabideau, did a spectacular job of doing everything they said they would do. Chesmar's done everything they said they would do. And this is a wonderful marriage, incredible access point of Sekisui into the state of Texas in all four major markets.
Yeah, wow, that's great. And were there any kind of surprises that you ran into that you could talk about and share with the audience related to bringing these great organizations together?
Well, I think the rising interest rate environment made for you need to we need to maybe adjust financial projections a bit. Yeah. Does that affect valuation much, if at all? So we have to have that dialogue and conversation on, is it really or is the company still worth what it's worth? It just may push closings into a subsequent year, but still it's super valuable, incredible amount of land and people. So in a rising interest rate environment, you really have to be strong and know how to pivot and adjust and work between your buyer and seller. And you have to be really good at people relations and working at M&A. There are other transactions that were announced and then not closed. And again, I think it's picking the right counterparty. It's also understanding how to pivot when you're in a lowering absorption pace, rising interest rate environment. So I think that it's very important. And I mean, it's important to have you got to have the right people mix between buyer and seller, and having a strong advisor that has a strong track record of getting deals done. That obviously helps too.
Yeah, no. You had mentioned the build to rent space, and that one of the reasons look at the acquisition was to acquire the build to rent operations. What are you seeing as it relates to publics, privates, and the build to rent industry? Are there more acquisitions that may be on the way where builders are picking up some of the build to rent operators?
Oh yeah, we're working on other initiatives like that. I think you'll see, further consolidation. Guys looking for. We've got an incredible group in South Carolina right now that are going to grow their build to rent business. This is my good friends Ralph Teal and Guilford Edwards. They are at Real Star. They're an incredible couple of operators, and they're really going into the build to rent space. They're putting some significant dollars out, and we're bringing in some investors in to work with them in the build to rent space. So there's definitely a lot of interest around this, and a lot of interest on the investing and on the M&A side.
Yeah. And Tony, over the years, you've been at this for a long time, but what has been your most significant learning experience that you would like to share with the audience, if you don't mind?
No, of course. I think, satisfaction equals perception minus expectations. Make sure we manage expectations of our clients so that they're always satisfied. I think the big learning experience is working with high integrity people. We have 3 rules in mergers and acquisitions, especially when we're selling companies. More is better than less, sooner is better than later, and don't work with jerks. And so these are all lessons learned over the years.
Yeah, each one of those it could be a bumper sticker. Yeah, that's great. That's great, Tony. Hey, well, I really appreciate you taking the time. But before I go, what else should I have asked you, but that I didn't, as it relates to what's going on in your world, either as it relates to M&A or the provision of capital to our respective client base?
Well, there's a lot of guys that are running around out there. Let me say your company. Let me say, hey, I just saw there was a Japanese investment bank that was sending around, just blanket emails. Hey, this Japanese acquirer is acquiring companies. So can we talk to you? Well, they're not even representing that they're just like using that acquirer as a means. So there's a lot of guys that are out there pinging on, I'm really good at selling your company. And I think it's important to understand for your listeners that you want to go in and say, hey, could you just give me like a list of all the deals that you've closed? And then let me call all those guys. And then, when was the last time you talked to Ryan Marshall at Pulte? And when was the last time you talked to Rick Beckwith at Lennar? And when was the last time you went to Tokyo? And when you were in Tokyo, I want to, who did you meet in Tokyo? When you went to Korea, when you went to China, who'd you meet with there? And when was the last time you went to Canada? And so you have to ask really, really, really hard, detailed questions before you hire an advisor, because there's a lot of guys out there that, kind of, want to try to do what we do. But you need to get an A team. So I'm just telling you that you have to be really careful when you're only going to do this once. Most of the time, guys are doing this one time. You have to be really careful when you're hiring an advisor.
Right. I mean, those are great questions that our listeners should keep in the back of their mind. If you're looking at selling something that you have taken potentially generations, to build, you want to make sure you're
Yeah.
putting it in the right hands.
Yeah, Carter, like how do you manage your tail liabilities? So as an advisor, how do you protect me so that warranty matters don't come back in my face?
Yeah.
Talk to me about that. It's like super detailed questions that if you know what you're doing, you know how to protect your clients.
But you only know those type of experiences having gone through it, lived through it, addressed it, and come out the other side successful, so you can learn from it and move forward and make sure, and we've got a list, what we call our financing checklist, that has over 243 items on it of learning experiences we've had that we never want to have happen again. Now, so I kind of hear what you're coming where you're coming from, Tony. On
You
that.
guys have had a tremendous ability on the builder finance side. Congrats! I know you just did a great. Well, I won't get into details, but I know you had an incredible deal on getting some advances on MUD reimbursables, which is super hard to do. So I know you guys have a great track record.
Yeah. Thanks for that, Tony. And it took about 3 years to get the right legal opinion, but we were finally able to close that deal literally minutes before joining the podcast with you. So thank you for that. Tony, if our listeners would like to get in touch with you, how best can they do that?
Yeah, I mean, we're at 415-561-0600. That's our office number. And then it's super easy for me. Just Tony actually it's Builder Advisor, ADVISOR group. Tony at builderadvisorgroup.com. We also have a website. So any of those ways are good.
And Tony, I'll make sure that I put all your contact information on our show notes. And is there anything else before we sign off that you'd like to add?
No, everybody have a great 4th of July and God bless America.
Yep. Likewise. So, Tony, thanks again for participating in the podcast. And I'd like to thank all of our listeners once again for listening to Land to Lots. And if you found this podcast interesting, I really encourage you to share it with your teams and subscribe to Land to Lots wherever you get your podcasts. And thanks again for all your time.
You have been listening to the Land to Lots podcast with Carter Froelich. Follow us wherever you find your podcast to never miss a new episode.